Hello and welcome to the first video of 2026. I hope you've had. Hello and welcome to the first video of 2026. And of course, there's only one place to start. Donald Trump kicking off the year in pretty extreme fashion, essentially swooping in, taking Maduro back to the US. And there's huge implications when it comes to financial markets. In terms of the main areas I wanted to look at, it's essentially the oil markets and then gold, and try to really pick through the bones of exactly what this means for those two areas as we move through a situation that is relatively fluid, but of course has major implications for both. So let's get into it. So notably, Venezuela has over the years been a friend and partner to some of the US's adversaries, the likes of Cuba, the likes of Russia and China. And certainly you can see that here with the fact that exports in 2023 were predominantly going to the likes of China. Now, this is happening on the US's doorstep, and the recent Monroe document, or essentially the recent strategic document that notes the merits of the Monroe document in the past, essentially means that the US is gearing up for a phase where it just really focuses on controlling its own hemisphere. That means everything within their zone, the likes of Central America, South America, is essentially theirs in the mind of the Americans. And that means having a Venezuela that has the highest crude reserves in the world, but is friendly to some of the adversaries rather than the US. That's not something that Donald Trump is going to put up with. And so we've found ourselves in the situation that we're in today. Notably, you can see that 23% of exports actually did go to the US. So they do have a relationship, but that is likely to dial up. And the relationship with the likes of Russia and China is likely to head in the opposite direction. Now, in terms of what's happening from a political standpoint, notably, we haven't necessarily seen Maduro's government taken down and the opposition leader placed in charge. Instead, it looks like they care less about actually improving things on the ground because they're happy to keep the Maduro government in place. I just wanted to get rid of him and put someone in at the top that is going to be beneficial for them and someone that has agreed to work with them. The question mark here is whether the Venezuelans are going to stand for that. Certainly being in a position where they're very anti sort of US and anti people coming in and controlling them means that many within the country are going to push back. And it's easier to just dictate from afar than the reality of actually having to have boots on the ground. And you have seen headlines coming out of Venezuela saying that there's armed gangs going around, that they're essentially kidnapping journalists and the like. So there is a strong chance that essentially if you do try to take over without actually having any sort of boots on the ground, then you leave this power vacuum that essentially leads to anarchy within the country. So certainly there's the potential for major volatility ahead. If you see someone running the country, but seemingly doing so to the benefit of the US rather than the Venezuelans, that causes the potential for an uprising. So there's no guarantee that whoever the US decide will run Venezuela will actually do so for an extended period of time. And they certainly will be at risk being in that position. But now we've just been hearing about an apparent agreement for 30 to 50 million barrels of oil to head over in the direction of the US. And this is crucial because essentially they've been trying to lock off the shadow fleet. And what this is the fleet of tankers that have been taking oil from Venezuela around the world, most notably China, has had to do so under the cover of darkness. They might take the oil and put it onto a ship, then transfer it onto another ship that's got the flag of a different country attached to it. And it means that it gets past the sanctions. You can't just have Venezuelan ships sort of traveling around the world with oil on them. So that essentially appears to be coming to a halt. There have been reports that a number of the tankers that were there already have been bolting out and trying to get away from the US to try and return to their countries that have bought the oil. But nonetheless, that, of course, is likely to be a relatively short-term affair, and there's going to be a squeeze on what goes in and out of Venezuela by the US. That's a lot easier to control the ports rather than exactly what's happening on the ground. So by and large, that dries up. So it means that the exports from, in terms of oil from Venezuela, start to dry up. And therefore, do they have new markets, most notably the likes of the US? Well, Donald Trump has said that he plans over the next 18 months to really ramp up infrastructure spending to be able to dial up the exports. But for the time being, they are striking this agreement that means that the exports for the time being can start heading towards refineries in the US. So that should mean that there's not necessarily a major squeeze. Oil prices have come down off the back of that news after initially rising. So let's get into some of these other charts. So this is a breakdown in terms of oil exports, and you can see by and large, it's all geared towards China. Some of it allowed with the blue section, but progressively as sanctions kick in, you see an increase in terms of this dark fleet or the shadow fleet taking oil to China. At the top end, you can see there's other countries around the world, and then there's the US. And by and large, that's controlled by Chevron, because Chevron have got a specific license that no one else has to be able to continue to operate in the country. That means that they're in a better position than many to be able to expand out as the US seek to build a presence in the oil and gas sector in the country. In terms of oil production, what we can see is historically, you can see in the past, they have produced sort of 2.5 to 3 million barrels per day. That has dropped dramatically, in part down to sanctions. And those sanctions, of course, as you can see, have had a notable impact. But not only that, it's also had a notable impact in terms of the ability to ramp up production in the future, because as you shut down wells, so these operations make it very difficult to reopen them. There's been a massive underinvestment over recent years, which means that it's going to be quite difficult for them to reopen them. And as you might have seen in the news, the type of oil that Venezuela has is very heavy, very sticky. It's not necessarily super easy to process. The US actually has an industry in terms of refineries that are actually more heavily geared towards processing this heavy crude than some of the light crude they have coming out of the country through the shale and the like. So they're actually relatively well geared up towards being able to process this oil. But nonetheless, that the nature of the oil can make it particularly difficult for them to be able to just reopen and ramp up production. So it's not as easy as clicking your fingers and suddenly saying, oh, you know, soon enough, we're just going to ramp back up to 3 million barrels per day and 5 million barrels per day. That's not going to happen immediately. There have also been question marks over whether US businesses want to go in. Like I said, there's going to be a severe sort of pushback within Venezuela unless you have massive security details for people within these companies, because essentially you're coming in and sort of pillaging the country, taking all of its resources. So that's not necessarily going to go down well with many, especially those that already have a vested interest in the oil and gas sector, because there have been many in Venezuela that whilst everyone else is poor, they're making money hand over fist. So that's worthwhile noting. Are the US companies willing to invest huge sums to get into Venezuela at low oil prices? I mean, oil currently $56 for US crude. That's questionable. We're not at $100. We're not at a point where they've got, you know, dollar signs in their eyes. There's going to be question marks on whether that's how they want to spend their money. And of course, they need to know that there's stability in terms of the environment that they're investing in for the foreseeable and for future and for the long term. Is that guaranteed? You know, it's questionable. In terms of where they stand from a sort of wider spectrum, it sort of gives you some sort of idea of exactly what we're dealing with here. Whilst we have got this sort of big headline around they have the largest proven oil reserves of any country in the world, that doesn't mean that you can suddenly just ramp it up and have huge output. Now, like I said previously, when they had a decent oil industry, you know, go back a decade or so, we were talking about, what was it, 2 or 3? Yeah, so sort of 2.5 to 3 million barrels per day. That would take them up towards the areas where they're kind of akin to Kuwait, UAE, Iran, that kind of area. So they would be a key member of OPEC in terms of production levels, significantly higher than where they are at the moment. But it's not like they're suddenly going to turn into Saudi Arabia overnight. Then you have that relationship between the reserves and exports, and this does highlight exactly what we're talking about. But notably, it shows you that reserves aren't everything, right? Because what we can see here is Venezuela has the most reserves, but the lowest exports of all of those being shown here. The USA has the lowest reserves, but this says the second highest exports. But of course, in terms of production, because much of that we kept in house, in terms of production, it has the highest production levels. So what we're looking at here is a highlight that it's not necessarily a guarantee that highest reserves equals highest output. Certainly there is a prospect of high output down the line, but it's going to take a long period of time, and there's question marks about whether companies are going to invest huge sums of money right now. There was one other chart I wanted to show you here, and this is essentially a highlight that some of the different companies that are sort of in play here, notably, like I said, Chevron is sort of front and center of this potential build out, because they're already in the country, they're already creating and exporting oil products. So that means that they're perfectly positioned to be able to expand that, and they have knowledge on the ground. So they would be at the forefront of any potential build out. But alongside that, you have ExxonMobil and ConocoPhillips, both of them in the past had investments. They got stripped away from them and repatriated. So they have sort of pretty hefty claims in terms of losses that they want back. That might get paid out. And certainly you'd be looking at ConocoPhillips as the potential benefactor of that in terms of the relationship of the size of the payout versus their market cap. It's roughly 10% of their market cap that they get in terms of the payout. ExxonMobil is a fraction of 1%, so it wouldn't necessarily be something that's going to move the dial. But you have the possibility of them regaining oil fields and moving back into that area. And then, as you can see on the right, there's other different parts of the sort of oil supply chain, so to speak, that could get impacted as well. So let's jump onto it in terms of the chart for WTI first and foremost. So here we go. This is WTI. And what's notable here is that we've had a bit of a topsy-turvy week thus far, right? And this highlights the changing opinion. So after it happened, we saw a notable rise on Monday. And this is because we essentially realized that they're not going to be able to export to China in the way that they have been, but there's likely to be a period of adjustment where they potentially aren't exporting straight away out to the US. Perhaps the Venezuelans that have been in charge aren't in charge anymore, and there's sort of a sort of redistribution towards trying to understand what companies are producing to go where, to ship it out to which refineries, where that money's going to be going. You know, there's likely to be significant upheaval, and therefore that could actually tighten oil supply, leading to this upside that we've seen. But there you get that bearish engulfing coming into play once again. So we came into this same resistance level around sort of $59, just below that 76.4 fib. And ultimately, it looks like we're rolling over once again. We've gapped lower into today's candle. And this really highlights the fact that Donald Trump's saying, right, we've already got an agreement. They're going to give us 30 to 50 million barrels. And then we're essentially going to start moving oil into our refineries. So this isn't necessarily something that they haven't planned for. Apparently, it's something that they already have a process potentially in play to be able to continue to pump, ramp up production, ramp up investment, and bring it into the US. So as long as that oil is being created and supplied to market and potentially increased, then that puts downward pressure on oil prices. Like I said, there's the potential for this to not go as swimmingly as they might hope. And therefore, if you see major upheaval or volatility in the region that points towards perhaps it not being as smooth as Donald Trump would like it, then you have the possibility of upside for oil prices off the back of that. But for the time being, the idea that they're just going to continue to pump, that output is going to grow over time and it's going to go to the US, which means it's going to hit the market. That puts downward pressure on oil prices and continues the downtrend that has been playing out over the course of pretty much the last, say, 7 to 8 months. So more of the same as it stands. Look out for these swing highs that keep being sort of created. There we go. There's lots of them. And then this sharp pullback ultimately led us into a retracement phase. It looks like the bears are back in play once again. And then I wanted to talk to you guys about about gold and silver, because certainly it's a key topic, but also it's very relevant in this example. Let's just jump onto this. So in terms of who has gold reserves within South America, Venezuela very clearly at the top of the pack. So they've been hoarding it. So there's question marks here about what's going to happen with all of this gold. Much of it is actually being stored in London. And in the past, the officials in London have agreed with the US to restrict withdrawals that would go to Maduro at the request of the US. So what happens? Does this market suddenly hit the market? Does this gold suddenly hit the market and we see a sharp devaluation? Probably unlikely, quite frankly. Does it essentially get tied up with constant legal battles and therefore it never actually gets withdrawn? Potentially. But that's certainly something worth looking at. Beyond that, what's notable here is, I think the next slide really highlights it. What we've got here is that Switzerland, and as you can see, the UK as well, have been saying that they're going to freeze assets of Maduro, freeze assets of people associated with them. Now, this really sort of highlights the same narrative that we've seen with Russia. And that was essentially when the Russians went into Ukraine, the Europeans decided that they were going to freeze Russian assets. This was a warning sign to anyone who is not necessarily best friends with the Europeans or the US, that you can't trust them with your assets. What happened after we saw that happening in Europe? Well, you can see here with the freezing of Russian central bank assets, whilst we normally saw that relationship with the 10-year and gold price, gold just continued to rise off the back of that, because ultimately we're in this position where people don't believe that they can hold on to assets in other countries. They want to essentially take an asset that is a haven, but something that can be essentially stored wherever they want at different jurisdictions, but also isn't necessarily trackable in the same way as maybe if you were buying US treasuries and alike, or if you were buying property. It's the kind of thing that can be frozen much more readily than, say, gold and silver, which in actual fact, if things were kicking off, you can quite easily move it to a different jurisdiction. Not necessarily the same if you have, say, a Russian oligarch with a house, or if you have a investment in, say, US bonds, US treasuries. They're the kind of things that they can refuse to pay out because of the relationship that you have with them. So certainly it's a warning sign. Whenever you see the freezing of assets for adversaries of the US or adversaries of the Europeans, that's a potential bullish signal for gold. And we have seen gold gaining ground off the back of that. Let's just quickly jump onto the charts once again here and now look at gold and silver. So in terms of the wider context, I'm sure we all know it. It has had a rampant rise over the course of 2025 and 2024. The question mark here is, are we coming to an end of it? I wouldn't necessarily say that I believe in that. I think the narrative around gold only continues to grow, and essentially this just adds more fuel to the fire. You could say, well, they have this huge stockpile of gold that could be sold. I don't necessarily think that's going to happen. I think this is a reminder once again in the value of holding precious metals. And bear in mind, we're now starting to see all this talk about Greenland. And what has Greenland got? It's got a huge amount of mineral wealth. There's a lot of talk about strategic importance from a military standpoint. That potentially might be something that they're looking at as well, no doubt. But as the ice caps start to melt, so that's going to be further mineral wealth when it comes to oil under the ground, but also on Greenland itself, huge rare earth minerals. So this is a year, I think, that is going to see a continuation of the domination of the theme around the need to take hard assets, copper, rare earth, silver, and the like. So gold is one of those assets that is the haven asset. It's heavily linked to the idea of being able to get away from fiat devaluation, and as we've seen here, the potential repatriation or the freezing of assets. And so that benefits from this. But then silver also benefits from the narrative that we've got going around Greenland at the moment. So we've seen this recent pop. You see the pullback. the inverse head and shoulders formation, the neckline break at sort of 4404, the rally, we're pulling back a little bit. If you were to look at it on the 1 hour chart, you can see that we're sort of coming into this support level here at 4442. If we break through that level, yeah, we could come into a wider retracement. But ultimately, it sort of plays into that narrative. Always going to see short-term trends pull into a wider retracement every once in a while. Then you go back into the short-term rally, pull into the wider retracement. So I wouldn't necessarily worry too much. But if we do break the 4442 level, it does point towards a potential deeper retracement over the near term, and in which case we'd be looking at a sort of fib retracement drawn from this zone here. But yeah, I would say that gold does benefit from this narrative around the freezing of assets, and then silver really benefits from what's happening by proxy through gold, but also through what's happening in terms of Greenland, and also what's happening with the likes of China locking off sort of rare earth exports from Japan. It's all part of the same narrative that everyone needs to grab as much assets as they can that are strategically important, and silver is certainly that from a standpoint of the tech companies. So you can see here we've pulled back into the 76.4 fib, bullish engulfing candle, starting to pull back a little bit, but I won't worry too much. I think unless we break the 774, then it's likely this pullback is going to be an opportunity for the bulls once again. If we do break the 774, like I said, you come into a wider retracement, and then it's likely that the bulls come back into play once again. But you can see this really strong period. We come into this sort of descending wedge formation, then break up through there, and now we're just in that sort of breakout period. So for me, gold, silver still looking very attractive, and oil I think is likely to be an asset that moves with the headlines. As you see any stories around the ability to easily export to the US from Venezuela and ramp up production, brings downside for oil. But if you see upheaval in Venezuela that might challenge the status quo or potentially point towards the newly instilled leader essentially being pushed out, or an uprising in the country, that potentially could cause major upheaval and upside for oil prices. Because despite the fact that the US have done this by force, I don't really see too much of a willingness of the US to put boots on the ground for an extended period of time to try and fight battles in Venezuela. That seems unlikely, and in which case we could see some volatility ensue, leading to potential upside in terms of oil prices. I hope that's been useful. Obviously, it's an ever-changing topic, so you're probably going to be hearing news around it on a daily basis at the moment, alongside what's happening in Greenland. A crazy time to be following the markets, but the main narrative, I think, is that this year is going to be dominated by the ongoing need and desire to become self-sufficient. And that means people are seeking to grab key and crucial materials, silver, copper, rare earths, you name it. These areas are going to be really key as people start to realize they can't rely on their historical trade partners, in particular, the unreliability of the US, as they potentially try to take Greenland off of one of their NATO partners. So yeah, interesting time indeed. Thanks a lot, guys.